All right, guys, let's go ahead and react to these.
And these are better than expected. Remember, the street was expecting about 436,000 vehicles delivered worldwide in the second quarter. Tesla delivering 443,956 vehicles in the second quarter. 95% of them, as it usually is, Model 3 and Model Y. And so this is much better.
Up to 731% gain on Tesla stock now at this point in time, up $342,000 on that position. Total value $388,000. So, woo, baby, loving Tesla. It can treat you very well. It can treat you very well, unless you bought in 2021. When I said don't buy Tesla, and that would treat you very, very bad. But outside of that, woo, it's a beautiful stock.
Was expected production coming in at 411,000 vehicles. 410,831 to be exact. So again, the reason you're seeing shares move higher, this is a better than expected number for the second quarter. Earlier today, we got Tesla's China numbers, and that had a few people a little bit nervous. Remember, China is the world's largest EV market, and therefore you want to watch it closely because it's such a big part of Tesla's overall sales around the world. In June, sales totaled 71,007.
Now, first off, somebody might look at this and they might say, hey, they beat by 4,000 vehicles. What's the big deal? Why is the stock blasting higher? Listen. When you're talking about a company that has been devastated in terms of their stock price and things start to go better than you expected, right? Guess what happens? Your stock price goes up very, very substantially. Same thing happens on the downside. When Tesla would just miss deliveries by a little bit here and there, the stock would plummet, right? And so, I mean, Tesla used to be a stock that was $400 at the peak, right? And today, even after this move, is $220 something. So it's still, a mile and a half away from where it reached those highs several years ago, right? And we will take out those highs in the future here, but for right now, we're still a long way from those highs. Let's not forget, right? So as the story gets worse and worse and worse, a stock just gets plummeted, just pummeled, right? But as the story gets better and better in regards to stock, you see the stock move up quite considerably, okay? And over the long term, things will adjust out. It'll make sense as far as PE ratios and things like that go. But when it comes to growth companies like a Tesla, a lot of it doesn't make sense in the short term. And a lot of it's just feeling, the business is getting worse, just sell the stock. The business is getting better, buy the stock. That's how a lot of people play growth stocks. Not that it's the right way, but you got to understand that's how this game is played.
Vehicles down 24% year over year for the second quarter. Tesla is in China, a little over 200,000 vehicles delivered. And I want to show you where Tesla is relative to BYD, because BYD's Q1 sales of electric vehicles, we're not talking hybrids, pure electric vehicles, so you can compare those with Tesla. They came in at 426,000 vehicles. So Tesla still remains number one worldwide. And there you see VW, GM, and Geely as well. And in terms of annual sales, I'll be curious what this does to the estimate of what analysts are expecting for the full year. Right now, it's come down to 1.82 million vehicles expected to be delivered this year by Tesla. For a point of reference, it was 1.81 million last year. So essentially flat. Do analysts now say, okay, maybe we're starting to see some momentum here. Maybe we raise the full year delivery estimate.
That's a good question.
Now, as you take a look at shares of Tesla, a couple of important dates to keep in mind. July 23rd, after the bell, that's when we will get the Q2 results, and we'll see what kind of impact pricing in China has had on those Q2 results. And then on August 8th, this is the one that so many are focused on. This is when Elon Musk, he talks about the robotaxi. What's the plan? Do they show us a vehicle? Do they give us a timeline in terms of robotaxi being deployed? Geofenced areas all over the place. Tons of questions surrounding what they're going to say about the robotaxi. That comes up on August 8th. But again, guys, for Q2, better than expected deliveries from Tesla.
Yep, absolutely. And, let's be very clear about the upcoming quarterly numbers. These upcoming quarterly numbers really don't matter. All that matters is that Elon Musk and the team is feeling more confident about the future and feeling more confident about what? What have I told you is so important. They basically say on this next conference call that margins are going to get better. So important. If they say margins are going to get better throughout the rest of this year and going into 2025, it's next level up for Tesla. Next thing you know, we'll take out 250 on this baby. People got to feel confident that the business has bottomed, deliveries have bottomed, and margins have bottomed. Margins is a big thing. If they can be confident, margins is going to get better and better. Gross margins, net margins as well, right? Operating margins. Woo, baby, that's going to be lift off, okay? Hey, I hope you enjoyed that clip here today. Listen, if you're an investor in the market and you do not feel like you're at a high enough level yet, let's say you understand some things in the market, but there's a lot of stuff that maybe you're watching my videos, you're like, I don't really understand. What exactly is that? How does this work? How do I find if a stock's undervalued or overvalued? How do I understand these financial statements on a higher level? All those sorts of things that you need to understand. I want you to click on the first link in the description down there. That is an application to join my private group, which has access to all my best course curriculums to teach you everything you want to know about this game, and all these things you might not fully understand, it's going to teach you that, okay? Plus access to my Discord community of 6- and 7-figure investors and myself in exclusive videos as well. First link in the description down there. Apply, and once you join in there, say hello to me. Next one up here, the bull bear cases for Tesla.
Doc, you're laughing already.
Yeah.
What do you make of this recent rally we've seen in Tesla? We're going to get into whether or not it belongs to the Mag 7 or not. But what do you make of this recent rally, especially with the thought that Tesla might likely miss those delivery numbers?
Yeah, I mean, I don't think a miss is going to be taken as a surprise. The stock's actually been moving higher on optimism around the China deliveries, right? The fact that, as you mentioned, several of the key players in China have beaten. People are hoping that the fact that we don't have arson issues in Germany and supply chain issues this quarter will allow them to maybe be a little bit stronger. But
so this video must have been recorded about an hour or 2 hours before Tesla delivery numbers came out. So this is actually really interesting watching this now.
I look at used car pricing. It's down 30% year over year.
Yep.
That's roughly double the price cuts in North America for Tesla.
Right. But you're hitting the fundamentals about the stock right now. But
oh my gosh. Oh, baby. He's got an $80 price target on the stock. $80 price target. The stock right now is trading $220, $230. Oh my gosh. What? No, the important thing he points out there, right, about used car prices being really in a weak place, even new vehicle sales being in a weaker place, right? Those are great points. However, let's be very clear about this. They're also horrible points. Because guess what? Used car pricing, new vehicle sales, although they've been horrible, it's not going to stay like that forever, right? As nothing does. And so to look at a business when it's in really tough times and assume that's going to continue forever and ever is a really, really bad way to judge companies. A really, really bad way to judge companies, right? The same way the bulls in 2021, a lot of them were only looking at the upside and thinking Tesla's only going to grow 50% revenues every year for all of eternity. It's like I was out there telling the Tesla bulls at that time, talking them off the cliff, like, no, this isn't how this works, right? Now the bears are on the other side for the past year or so doing the same exact thing the bulls were doing, just on the other side, right? On the bear side, thinking these trends are going to continue forever and ever. It's like, no, that's not the way this works, right? And eventually you find an equilibrium somewhere in the middle. That's going to be very good for Tesla overall.
I mean, it sounds like you're thinking that's just irrational exuberance. I mean, is there some reason that you can attribute, even as the bear in this conversation, for the stock to rally so much, about double digits over the last month?
It's optimism in China. I mean, people trade this thing on data points. It's a high velocity name. It's a retail darling. So when the headline news is coming through positive, stock's going up. When the headline news is coming through negative, stock's going down.
All right. Stephen, I'm going to come over to you. You're the bull in this situation right now.
Straight up.
Even you believe, you said the whisper number for Tesla deliveries actually is going to fall short of what the estimates are expecting. What do you make of this recent rally? What are you possibly, but at least investors, are seeing in this stock over the last month or so?
Yeah, I think there's a few things. I think, first of all, if you look at Tesla and you just look at it as an
265 price target, pretty fair. I think there's a decent probability, as long as the market doesn't go down in any substantial way, that Tesla's finishes 300 plus. I talked about that on the main channel last night. I did a very in-depth Tesla video there. If the market gets hit, then, some of these other price targets are probably more realistic. Not the $80 one. That's just ridiculous.
company. You're not going to buy the stock, right? You're buying into a technology business. And I think Craig's right to an extent on what people are looking at with short-term numbers. But I also think people are thinking about Tesla at a larger scale and what they're doing on both the full self-driving side and how the AI business is really fueling the company, both on FSD, full self-driving, and on ultimately longer term, the robotaxi side.
All right, so a lot of people have been pointing to that robotaxi event coming up in August. By the way, I want to get to your price target. You're at $265 on the stock. Ahead of that, as we look at Tesla, just the fundamentals of the company, delivery numbers and everything else, Craig was mentioning some of the pricing issues that the company's having as well. Does Tesla belong in the Magnificent Seven when you look at the stock? I know you're bullish on it, but do you still believe it belongs in the Mag 7?
Yeah, and again, I go back to the fact that this truly is a technology business. They are set up for significant long-term growth. Part of that is clearly the pace and the timing of EV adoption and how that impacts the core business. But a larger part of that long-term is how we think about the application of AI technology and also the ability to just fuel the full self-driving piece of the company. I think what's important to note is when we look at our target price, we think the stock's worth, $190 to $195 on the core operations, and the upside to our price target from there really comes from the other initiatives. And quite honestly, I think we're being conservative on the long-term adoption rates on those initiatives.
All right, Craig, I'm going to come over to you. I'm not going.
Does Tesla deserve to still be in the Mag 7? In my personal opinion, it does. I understand the numbers have not been exciting like many of the other, like pretty much all the other Mag 7s last couple of years. Well, Apple's numbers haven't been that exciting either, just to be quite frank. I mean, Apple's latest quarter, what was their iPhone revenue down? Like $6 billion? Should we kick Apple out of the Mag 7? Right? Like, the end of the day, the last couple of years have been the worst time for big ticket purchases since the great financial crisis. Let's be very, very clear about that with interest rates being up here. And you can see that, some of these automakers are starting to report really bad numbers. You're seeing, obviously, existing home sales in a horrible, horrible place. All that matters significantly, right? And it doesn't stay like that forever. So when you're going through the worst time probably since the GFC for these big ticket purchases, you can't judge it just off of that forever.
Surprised by your answer, I don't think. But do you think that Tesla needs to be kicked out of the Mag 7? And if so, why? What are the factors that lead you to that conclusion?
Tesla's a retail darling, right? And why is the big question? It's because they've changed the world, right? They've brought EVs to the mass market and forced all the rest of the automotive industry to follow them. So they deserve special treatment. Does that mean they belong in the Mag 7 or not? I don't think so. I see it as egregiously overvalued. The stock's trading on expectations for things like sentient humanoid robots by the end of 25. That ain't going to happen, Mike.
No one's valuing that in. Let's be very clear about that.
Elon Musk is prone to hyperbole, right? The FSD, full self-driving. No. I mean, they don't have the technology, the actual energy tax on the drivetrains more than it is for actually driving A to B.
So, Craig, you're hitting on some of the things that were in a Wells Fargo's note yesterday. A lot of people were following. Tesla's valuation, according to our system, 74 times forward earnings. The rest of the Mag 7 peers at 35 times. But, Stephen, I want to come back over to you. Another point in this note is that the outlook for 3-year EPS growth for Tesla, it's about 12%. The rest of the Mag 7's at 26%. How can you be in one of these in this high-flying group if you have such a lower growth rate? And is Tesla, in your mind, still a growth stock?
Yeah, well, I think yes, it is a growth stock. I think when you think about the pace of growth that we're seeing in the near term, we wrote this. We initially covered in the stock only about 10 days ago. The very short term, there are clearly EV adoption headwinds which are impacting the earnings profile. Right, I don't think that's a shock to anybody. I think when we look at the rollout of incremental vehicles, the quote-unquote Model 2, which should start to be produced over the next 12 to 18 months, that should be another high-volume vehicle for the company.
Yep,
and then you layer in the long term. And again, when we think about the growth story for Tesla, we're talking about 27 to 35, where you start to get significant adoption rates of things like FSD and robotaxis. And I do agree with Craig in the short term. I do think there are headwinds that's pretty well documented in our reports. But I think you have to have a vision of Tesla medium to long term to buy the stock. If you're buying this thing for a month or 2 months, clearly it's going to be choppy and it's going to trade.
And there could be, and I talked about this on the main channel last night for you guys that saw that video on the main channel, Financial Education, right? I talked in depth and detail about the potential tailwinds coming for Tesla in the short term, talking specifically fourth quarter. Very, very important you understand that. Let's react to this last one.
Week with a buy rating of and a price target of 265. Thanks so much for joining us, Stephen. Were these numbers this morning, were they really a big beat?
Yeah, and thanks for having me. I think as we came into the quarter, I think there were a lot of people who were talking about a number which was below the consensus. I think the whisper number out there was around 415,000. We were at about 433, so it was solidly above, I think, what people had expected going into the news this morning.
And talk me through it. We teased it there a little bit.
I was like, wait a minute. Am I watching the same video again? Because I see the Stiefel stuff in the background. This guy had the Stiefel stuff, but this is a different gentleman. I'm like, what in the world's going on here?
Drove that beat?
Deja vu?
Yeah, I think a couple things. And I think first, quite honestly, people have been pretty negative about EV adoption rates. And, it was still down year over year, about 4.8%, better than the drop we saw in 1Q year over year. So that was sort of a positive step by being less bad. I think probably the big drivers of the beat were, the Model 3 was revamped, and the new version is out in the market right now. And I think that's driving a lot of interest. It's a better vehicle. It's a quieter vehicle. And I think there are probably some people who have been waiting for the launch of the revamped Model 3 before buying a vehicle. So I think that's probably one of the drivers behind the upside.
So tell a little up for us. So where do you see deliveries over the next couple of years? Is this back to a growth in volumes name, or are we sort of still plateauing? And what about pricing as well? I mean, will margins be expanding or shrinking? Because I know there's other strings to Tesla's bow other than just the EVs these days, but are we talking about a growing both in the top line and bottom line in terms of its car business or not?
Yeah, I think when we look at the EV business specifically, you have pricing, which has been down. I think if you look at the first quarter of this year, the average profit per vehicle is down about 19% year over year. Price was a large portion of that. They're doing some things on the cost side to help mitigate the pricing. So we think margins start to stabilize here. But from a volume perspective, there's kind of this balance between rising EV sales, albeit at a lower rate overall, and Tesla's very high market share. And kind of how does the market share balance with overall demand for EVs? So we think deliveries rise in 25 and 26 year over year. We think 24, our delivery numbers are down slightly from 2023. And, we're down, year to date. We're already obviously off through the first half. But we think as you start to see better EV adoption rates and potentially a little bit better economic environment in 25 and 6, you get the rollout of the Model 2, which is a mid-priced or lower-priced vehicle, more in the $25,000 range, which is more approachable for more consumers. I think that helps drive volumes as you get into next year in 26. So we do see kind of a path to kind of a reacceleration of growth as you get beyond 2024.
Remember when Tesla stock went all the way down to $101? If I recall, I have some shares in the public count that are at $103 that I bought during that particular time. Obviously, the shares I bought back in like 2019 are way lower cost basis, but still, that like 103 I got there is very, very impressive. So what am I doing with Tesla at this point in time? I'm holding every share I got. Do I still view Tesla as a buy? I do. As long as people have a long-term outlook, yeah, I still view Tesla as a buy. This company just has too many growth levers over the coming years. We know we're in a horrible environment for big ticket purchases. We know that. There's no, you look at so many different companies, like even the home builders are starting to report, some problems in their sales, and they were one of the only beneficiaries of high ticket because inventory of homes are so low. People were like, oh, let's just go buy a new home, and then they'd buy down the rates and those sorts of things. The home builders would, right? But you look at existing home sales, you look at something like RH's numbers are still declining right now, right? But big ticket purchases are, I think they're in a somewhat bottoming phase this year. It doesn't mean they're going to stop going down this year. It's a case-by-case basis. There's going to be certain companies and certain industries that are going to start showing some actual growth in the back half of the year. And then I think there's going to be more showing growth in kind of 2025. And I think as we tick on the years, we'll get out of this really horrible cycle we've been in regards to big ticket purchases. And obviously, if the Fed lowers rates over the next couple of years to much more normal rates, which a Fed funds rate of 2% would be a lot more normal, that's going to help big ticket purchases in a substantial way, folks. Okay.